I'm sure by now you've seen every video on YouTube talking about the 2021 housing market crash, the housing bubble that we're in, but what are the actual signs that the housing market is about to crash? Or that the real estate bubble is about to pop? So I'm gonna talk about the 5 signs that you'll be able to look for that'll tell you whether or not the housing market is actually about to crash, so you can ultimately time it right and you know whether or not it's the right time to buy, the right time to sell, the right time to invest, or the right time to run the other direction. And I'm a real estate agent myself. I'm also a real estate investor. I own multiple rental properties. We're currently flipping a couple of properties, and I myself am constantly, day after day, looking at the data. I'm analyzing everything because I want to be very, very certain of, if there's about to be a market crash, I want to be very aware of it. So if you wouldn't mind, real quick, before we dive right into the video, doing me a huge favor and just smashing that like button for the YouTube algorithm. The first sign that we want to pay attention to are home prices that start to plateau after rapid periods of appreciation. When housing prices start to go up and then taper off and plateau right after a long period of time where year after year we were just seeing massive appreciation and acceleration, that is a big warning sign that we want to pay attention to, because that could mean that housing prices are about to go down. So as you probably know, the housing market crash of 2008, the Great Recession, we've pretty much been in like a 10 or a 12-year bull run, okay? We've seen housing prices literally skyrocket, and in 2020, in March, April, May, June, you would have looked at the market with everything going on in the world, and you'd have definitely assumed that housing prices would have just completely tanked. But they didn't. They did the opposite of that, and they continued to just skyrocket. Now, obviously, there's a lot of reasons why that happened, and I've made several other videos on my channel talking about that. For the purpose of today's video, I'm not going to dive into that too much, and I just want to leave you with the fact that you want to pay attention to housing prices when they start to plateau in your particular area, okay? This is something that you can obviously look at across the entire country, but what I would encourage you to do is to look in your particular area. For example, if you live in California, like Los Angeles or somewhere like that, then housing prices are already starting to plateau, okay? Now, partially because everybody's leaving California, like literally, like Graham Stephan, Joe Rogan, I mean, everybody you can imagine pretty much is leaving California. I mean, they're literally getting the heck out of Dodge, okay? Places like that, places like New Jersey, New York, okay? These places that have been very, very expensive for long periods of time, people are already starting to migrate away from, okay? They're moving elsewhere. They're moving to Texas. They're moving to Arizona. They're moving to Las Vegas, okay? So you definitely want to pay attention in those areas. Now, there could be other areas to follow, so you definitely want to just keep a close eye on it. The second sign that we want to pay attention to when understanding when the housing market or the housing bubble is about to pop is basically when there's a lot of riskier mortgages in the market. So if you're familiar at all with the 2008 market crash, the Great Recession, then you probably are familiar with the fact that there was a lot of subprime mortgages. A lot of people called it the subprime mortgage crisis, okay? And if you're not really familiar with what that is, a subprime mortgage is basically a large majority where mortgages are essentially subprime, meaning they're not good mortgages. The people that are getting those mortgages, they're not very qualified, right? And they probably shouldn't be buying the house to begin with. Now, there's always going to be subprime mortgages in the overall market, but it should only make up a small percentage of the total amount of mortgages out there, okay? So when we see the amount of subprime mortgages going up, and that number increasing, that is a huge red flag. Now, there's a couple of different ways to obviously look at this, okay? So we can obviously pull data and we can look at the amount of subprime mortgages that are getting passed. We can also look at the lending requirements. I know for me personally right now, I'm actually buying a rental property, okay? I already own the property actually, but I have a hard private money loan on the property, and I'm in the process of this particular property of refinancing into a conventional loan loan, and basically it's extremely difficult right now, okay? Obviously, I'm self-employed, so self-employed people struggle a little bit more in general with getting a mortgage, but the lending requirements as of right now, okay, at the time of making this video are very tight, okay? It's actually not easy to get a loan right now. I've heard this time and time again lately. So right now, for this particular point, it's looking to me like we're in the clear, okay? It's actually the opposite, where it's actually very difficult to get a mortgage right now. And if you don't have all of your ducks in a row, if you don't have your I's dotted and your T's crossed, then good luck getting a home loan right now. Another thing we can look at is private mortgage insurance, okay? Private mortgage insurance is basically required if you don't have 20% down, and it insures the lender basically of the loan, okay? So, you see a lot of FHA buyers and stuff like that come into the market, a lot of first-time home buyers, stuff like that. What happens is a lot of those people have to get PMI, which is private mortgage insurance. So if we see a lot of PMI in the market, that will also hint that we've got a lot of subprime mortgages in the market, okay? So we wanna make sure that that number isn't rapidly increasing, because if it is, that can be a really big red flag. So these are all things that we really wanna pay attention to. We wanna make sure that we have a healthy balance of good loans and good mortgages versus not so good loans and not so good mortgages. And again, you're always gonna have both, okay? So, don't think that there's gonna be zero subprime mortgages in the market. It's basically non-existent, okay? It's never gonna happen. You're always gonna have borrowers that aren't as qualified to get approved, but you want that percentage overall to be very low, okay? So again, this is a big sign that you wanna look out for when trying to determine when the market is going to crash, when the market is going to plateau, or when the housing bubble is going to pop. The third sign that the housing bubble is about to pop is interest rates rising, okay? Now, there's a lot of different ways to kind of figure out if interest rates are gonna start rising. Now, one of the big ways that you can pay attention to is you can look at the 10-year Treasury yield, okay? The 10-year Treasury yield will typically tell you if interest rates are about to start going up, because the banks and the lenders have got to compete with the 10-year Treasury yield. So if less investors are buying the Treasury, now, as of right now, to keep it very simple, the government is essentially forcing interest rates to stay low. And you've seen Jerome Powell come out, and a lot of people basically come out and say that their goal is to keep interest rates low. They're gonna do everything they can right now until we're fully through the pandemic and everything that we're going through to keep the interest rates down, okay? But what happens if they don't do everything they can, right? And the 10-year Treasury starts going up because less investors are buying it and the government isn't buying up a bunch of 10-year Treasury bonds. What happens? Well, the yield starts going up and interest rates follow. Now, obviously, it is a little bit more complex than that, okay? I'm trying to keep it pretty simple for the video, so do me a huge favor, okay? If you haven't already, just smash the like button for the YouTube algorithm again. It would help me out a ton. But basically, you want to keep a close eye on interest rates. Now, obviously, interest rates at an all-time low right now. And when you look historically speaking, you typically have low interest rates with high home prices. And then you have the opposite. You have high interest rates with low home prices. So when interest rates start to go up, home prices typically are gonna start to go down, right? Which is why in the market that we're in right now, with low interest rates and prices are up, it's really simple, because with low interest rates, we have more buyers coming into the market. With more buyers in the market, causes home prices to go up. There's more demand, right? With more demand, low supply. Supply and demand is the main variable for causing determining home prices in general. The fourth sign that you want to pay attention to with the housing market is you really want to look at the overall supply and demand. And I'm going to kind of combine supply and demand with foreclosures, okay? Now, we have a very interesting thing happening right now. So basically what's happening right now is the government keeps extending the eviction moratorium and the basically foreclosure moratorium, okay? And basically what happened was back last year in 2020, as a part of the CARES Act, they basically put moratoriums in place that wouldn't allow banks or lenders to foreclose on houses. Also wouldn't allow landlords to evict tenants that were behind on the rent. Now, they've continued to extend those moratoriums. So, there's a lot of people out there that are saying that at some point we're gonna have this big tsunami of foreclosures. Now, I'm not entirely sure it's gonna happen, and I'll explain why. I think, in my opinion, what's gonna happen is the lenders are basically going to do loan modifications, and they're going to tack on all these missed payments to the end of the loan. So basically, nothing's due up front. It's just due in the rear, okay? It's due at the end. So that wouldn't actually cause a big wave of foreclosures. But again, we're talking about foreclosures and supply and demand. They go hand in hand. If you have a lot of foreclosures, you have more supply on the market. If you have more supply, you don't have as much demand, causes prices to go down, okay? But right now, nobody's getting foreclosed on. On top of that, a lot of sellers don't want to sell. So right now, supply is really low. You want to keep an eye on the supply, okay? If supply goes way up, then typically demand is gonna go down, okay? Right now, supply is at an all-time low. I can tell you firsthand, I'm an agent in Arizona, I'm also an investor, and our supply in Arizona right now is less than a 1-month supply. That is literally insanity, okay? A healthy market, typically, no matter where you go in the country, is about, okay, give or take, a 3 to a 6 month supply, okay? Anything less than 3 months is typically a seller's market. Anything longer than probably 4 to 6 months, it would be considered a buyer's market. So somewhere right in between is what you would probably consider a neutral market, okay? We're not in a neutral market right now. We are in a red hot seller's market, okay? So you want to pay very close attention. Now, we've got about probably in Arizona right now, Maricopa County, a very large metropolitan area, we've got probably 6,000 or 7,000 houses on the market. That is a very, very low supply. Your healthy supply in Maricopa County is going to be probably somewhere around 30 to 35,000 houses. We have 6,000 to 7,000, okay? That is extremely, extremely low. Now, if I woke up tomorrow and the supply started going up drastically, went from 6,000 or 7,000 one month to the next month 10,000 to 15 to 20, we are literally heading towards a housing market for sure plateau, if not decline, okay? So, you can typically predict this stuff. I mean, the real estate market doesn't crash overnight, right? This isn't like the stock market. I mean, the stock market, you can have a massive sell-off, you can have people short a stock, and the stock will go down overnight. I mean, we've seen GameStop, we've seen AMC, we've seen Nokia. You've seen that, right? I mean, it's not just me. You've seen GameStop go from pennies on the dollar to $300, $400, and then literally plummet overnight, okay? So the real estate market doesn't do that, right? The real estate market takes time. It takes time for the market to correct, for the market to crash. So that is why I wanted to make today's video, because I want you to know the different things to look out for so you can predict if the market is on, the brink of collapse. The fifth sign that the housing market is on the verge of collapse, that the housing bubble is gonna pop and everything's gonna fall apart, is that people are losing confidence, especially buyers, okay? When buyers start to lose confidence in the market, it's typically one of the initial signs that we're on the brink, okay? It's almost like a self-fulfilling prophecy, right? When people start losing confidence, then that causes more people to start losing confidence, and the more people start losing confidence, the less people that buy, and the less people that buy, then sellers are all oh my gosh, and they freak out, and then everybody lists their property all at once because they all want to sell before everything corrects, which causes all the sellers in the world to sell at the same time, which causes supply to go up, which causes demand to go down. Then it's like this big self-fulfilling prophecy where it's just it's essentially the snowball effect. So you really want to pay attention to buyers. What are they talking about? What are home loan lenders talking about? What are people talking about? When you go out and you're having a drink with your friends, you're having a drink with your family, you're talking to other people, you're talking to real estate agents and other buyers in the market, what are they saying? Are they saying that now is still a great time to buy? Are they saying to take advantage of the low interest rates and that, they just bought a home and they're stoked about life and they're happy and they're on top of the world? Or are they saying that they're skeptical and they're not sure and they don't know what to do and blah, 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 okay? You really want to pay attention to what are people saying, right? Now, obviously, 2020 and 2021, it's a little bit weird, okay? I mean, look, let's just be honest. I mean, nobody had any idea. Still to this day, nobody has any idea. Nobody's ever been through a pandemic before. Typically, what are we talking about? Like every 100 years there's a pandemic. So chances are, if you're watching the video, you've never been through anything like what we're going through, okay? Now, that in and of itself is gonna cause a little bit of uncertainty. But again, we wanna pay attention to the buyer confidence, okay? If the buyer confidence starts to go down, it is a huge red flag, and we want to be very, very, very aware of that so that we can plan accordingly, okay? Again, that's all we want to do, right? We just want to plan accordingly, okay? We want an emergency fund. We want maybe an additional stream of income. We don't want to be over leveraged. We want a secure job. We want to make sure our payments are something we can afford. Don't ever buy for the short term. If you're only buying, for the next like 1 to 2, maybe 3 years, might not be the best time to buy, okay? If you plan on owning for 5, 10 years, you should be just fine. Don't sell in a down market, obviously. The market is always gonna go up and it's gonna go down. There's nothing you can do to prevent that. It's gonna happen no matter what. So just hold on tight. You're just go along with the ride and everything should be just fine. I really appreciate you for watching the video. If you watched to the very end, do me a massive favor and drop in the comments section below letting me know you watched to the very end. I would love to communicate with you. I would love to interact with you. So if you have any questions at all, definitely let me know. I've got several links in the description. Definitely go check those out, like where I find my best real estate deals for my investment properties. I've got 2 free stocks when you sign up for Webull and a couple of other things down there as well. So definitely go check that out. I appreciate you so much for watching, and I look forward to seeing you in the next video.